Okay, and further laid out or expanded wholly and exclusively for the purpose of business and profession. So not being capital, not being personal, okay, and it should have been laid out. That means it should have been expanded wholly and exclusively for the business purpose. So third test is the expenditure should be wholly and exclusively for the business purposes. For example, employee, you have an employee, okay, the employee is working for the business, so it should be an expenditure wholly for the business. You will get the deduction. So that is a concept which should be kept in mind. Okay, further it has been clarified that if there is any expenditure which is prohibited under some law, and if that expenditure is offense basically, okay, that means you have violated some law. So anything which is in prohibition of a law, you cannot get that particular deduction. Put it differently, any illegal expenses, normally, I mean this is a general words, very generic language. Illegal expenses, the illegal means something which is because there will be some prohibition under the law and you have incurred that, and then only it will become illegal. Otherwise, how it will become illegal? So we say illegal expenses will not be allowed. But technically the law says anything which is prohibited under the law, for which you are not going to get any deduction whatsoever in this particular clause. And explanation number 2, with respect to CSR expenditure, corporate social responsibility, it says that it shall not be deemed to be an expenditure incurred for the purpose of business and profession. It shall not be deemed to be an expenditure incurred by the assessee for the purpose of business and profession. So basically this explanation 2 with respect to a CSR expenditure is a clarificatory provision. It says that just because it is a CSR expenditure, it shall not be deemed to be an expenditure incurred by the assessee for the purpose of business and profession. In other words, you have to justify the test of business, and if you can say that it is but for the business, okay, it can be allowed. Okay, however, you cannot say that just because it is a CSR expenditure, it will be what should I say, allowed. Always you will say allowed. It is not like that. In other words, law makes it very clear that shall not be deemed to be an expenditure for the purpose of business and profession with respect to the CSR expenditure. Okay, so firstly, you have to remember these hardcore basic things. Section 28 charging section, 37(1), and one more section, section 145, 145A, etc. provision which says that every income which you compute under the head business and profession or under the head other sources will have to be computed with respect to the method of accounting. So method of accounting followed by the assessee has to be applied, and accordingly you will have to compute your income under the respective heads. Now see, in a question like this, okay, now let me go directly to the question. So we start with profit as per P&L. Listen very carefully, where our answer will start with profit as per P&L. To this we will do add less adjustments. Okay, now here first of all we will go with all the additional information. Wherever it is, all the relevant provisions we will discuss. Okay, after doing all these adjustments, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, okay, we will do all the addless adjustments, okay, which are in the additional information. Thereafter we will go through all these credit items and all these debit items, that whether it is as per the business or whether something which is not in the business income but some another head income or something like that, those adjustments we will carry out, and thereafter we will get the income under the head business and profession. Okay, now you have to open up your answer like this. Okay, see, profit as per P&L 50,000, adjustments, okay, we will carry out all the necessary adjustments. Okay, then we will take the total. Okay, these adjustments, if income is to be added, we will do plus. If it is not required, then we will do minus. Whatever the respective adjustments we will do, we will get income under the head the business and profession. Okay, and this is our main objective in this particular question. Okay, now As and when I keep on telling you that do this particular adjustment and I keep on explaining that to you, you yourself start developing the answer. Okay, open up your answer with respect to each and every point and each and every adjustment. You keep on doing this particular adjustment, and whatever explanation I'm giving you, add it as a comment. See, in examination condition, every answer you have to give is like a theory answer. Keep that in mind. You have to give it like a theory answer, although it's a practical question, but give it like a theory answer. So all the explanation which I'm giving you for doing that particular adjustment, you have to write it here. Okay, for example, I will say that as per the provisions of this section, the provisions are like this, and what is data given to me in the question is like this, and therefore the conclusion is that expenditure is allowed or not allowed, and therefore we are doing this particular adjustment. The entire discussion, friends, that we are doing, you will have to write in these theory points. Okay, and thereafter you have to do that particular adjustment. So I repeat, and while I'm solving the question, I will not write all these things on the screen, because then it will take enormously more time, and it will amount to spending of unnecessary time for the class, which students can easily do it. Okay, and thereafter you take the total by yourself. Okay, so that totaling work also you better do it by yourself only. Okay, because that calculator work also, as far as possible, I will save the time of the students in the class. Okay, so you start doing all the adjustment, open up your answer and keep on writing and keep on updating, and at the end of it I will show you the entire answer, entire total answer and everything I will give it to you. Okay, so it's not that you cannot recheck your answer. I will give you that particular opportunity at the end. Okay, so now we know first glance of the question, we know all the debits, we know all the credits. Okay, and just have a rough glance: salary, rent, interest, depreciation, printing, postage, telegram. Okay, other general expense, sale, closing stock, gross profit. This rough checking, sometimes questions, no typing mistake also will create crazy things. So gross profit, okay, the figure is okay correctly given, a very rough view. Okay, further additional information. Okay, let's quickly start. Okay, it was found that some stock were omitted to be included both in the opening and closing stock, and the values of which were opening stock 9,000 and the closing stock is 18,000. Now see, our whole objective is to get the profits and gains out of the business and profession. Section 28, read with section 145, 145A, etc. provision where the method of accounting is to be followed. So whatever the stock adjustments for the tax purposes. Now some stocks were omitted. So this much stocks have been omitted. Opening and closing stock. So if the opening stock was omitted, then I'll have to adjust that. Okay, so I have to, what should I say, opening stock I have to increase by whatever the figure is, 9,000. Okay, and the closing stock is 18,000. So I should do this particular adjustment. Closing stock I should increase by 18,000. Is that very much clear? Now, ultimately, I have started my question with, see, profit as per P&L. I have started my question with the profit as per P&L, that is 50,000. Okay, so whatever is the closing stock is going to increase my income. So plus 18,000. That is going to increase my income, but at the same time, the opening stock which was omitted, that is going to reduce my income. Okay, so that is going to be plus 18,000 and minus 9,000, and read with section 28 and section 145 where the method of accounting is properly to be followed. In section 28 says profits and gains. So we want correct profits and gains. So this is how we are adjusting the profits at the respective places. Okay, so that first adjustment already done. Okay, so plus 18 and minus 9. Okay, salary includes 10,000 paid to his brother, which is unreasonable to the extent of rupees 2,000. I repeat, salary paid to this brother. Now brother means a related party. A related party transaction. A related party transactions are considered on a reasonable basis. Okay, section 40A2. Okay, one second, let me scroll. See section 40. This is a section 40. This is a small a. We want is a capital A. One second. Okay, section 40 capital A, subclause 2. Okay, where there is any related party transactions, where there is any payments made to a persons referred to in clause B, this is a related persons. Okay, fair market value of goods, services, etc., what has been expanded or what has been provided, if it is excessive or unreasonable, okay, it shall not be allowed as a deduction. And this related person, there is a long definition which is provided for a company directors, for the firm or partners, for individual, all the relatives of the associate. Brother will be the relative by the definition, so no need to go into that entire lot of details of that. It's a related party transaction. We have to consider the fair market value of goods or services. If it is excessive, the excessive amount will have to be disallowed. Okay, so excess figure has to be disallowed. Now say for example, if I am giving salary to my brother, supposing 10,000, okay, per month, for example, and the fair amount in the view of the officer is also 10,000, for example. So in that case, there will be no disallowance. You don't need to do any of this particular adjustment. Okay. See, I already told you that section 37 to section 43B, they are disallowing sections. So this is basically going to tell you that following items will not be allowed to you as a deduction. Okay. Further, in the given question, see, it's a related party transaction. And it is unreasonable to the extent of 2000. Okay. So these 2000 will have to be added. So add 2000 and give a complete theoretical point in your answer. Add, and now you keep on updating the answer by yourself. Wherever it is something required, I will mention that. Okay. So add 2000 for that. Okay. Now whole of the printing and stationery was paid in cash. The cash expenditure, very beautiful thing. Okay. Now see, whole of printing and stationery. Printing and stationery is how much? 23,200. Okay. The whole of the expenditure is paid in cash. Now the law says under section 40A3 provision. Okay, subclause 3, and read with that subclause 3A. Two of the sections together we have to study and understand. If there is any cash transactions, when I'm saying a cash transaction, I'm using a very generic language. Okay, technically the law says if you are doing any transaction otherwise than by account paid check, use of electronic clearing system, through a bank account, or through other electronic modes as may be prescribed. So if you are doing any transactions otherwise than through banking channel as specified, okay, so logically the cash transaction. Okay, So cash transaction is a generic word. Okay, so if you are doing a cash transaction and if you are claiming it as an expenditure under the head business and profession, it will not be allowed to you as a deduction if okay, the aggregate payments made to a person in a single day, I repeat, if the aggregate payments made to a person in a single day, I repeat, aggregate payment, that is a total payment. So if you have a transaction 1, supposing 6,000, you have a transaction 2, say for example 7,000 in the same day. So total is 13,000. So aggregate per day to the same person. So aggregate payment per day and to the same person. Okay. And if it crosses the limit of 10,000 rupees, if it exceeds 10,000 rupees, then it shall not be allowed. No deduction shall be allowed in respect of such expenditure. So the cash expenditure exceeding a limit of 10,000 rupees will not be allowed to you as deduction. Is that absolutely clear? But that is first point. Okay. Now there is one complication. First of all, let me explain that complication. I will solve that complication, then thereafter I will go back to that particular question. Okay. The complication is, See, in a one particular year, I have an expenditure. I have not paid the money. It's a year number 1. In the year number 2, I pay the money. And I'm paying cash. I'm paying cash. Okay. But then only all this discussion will come with context of 48.3. Or put it differently, in year number 1, I already pay the money. But I have not booked any expenditure because it is an advance payment. And in the year number 2, I booked the expenditure. Okay. The doubt will come that in which year the amount will be disallowed. In which year the amount will be disallowed. Is that very much clear? Okay. Now, first situation. Supposing when the year in which the assessee incurs any expenditure, where assessee incurs any expenditure for which you are making the payment. So in the first situation, that means this situation A, okay, you have booked the expenditure, but you have not made any payments. You have not made any payments in the year number 1 in my situation A. So you will wonder that in the year number 1 there will be no disallowance because I have not paid only any money. Okay. Now the doubt will come whether in the year number 2 will there be a disallowance. Will there be a disallowance? Okay. Secondly, in the year number 2, because I'm only making a payment, there is no expenditure in that particular year. So normally you are saying that I'm going to disallow the expenditure. So for disallowing the expenditure, there should be an expenditure for that year, because every computation, friends, you have to imagine that is a computation for the year. Is that absolutely clear? Now, this kind of a problem is solved by this clause 3a. Okay, this clause 3a says that where any allowance has already been made in any assessment year for which the liability has been incurred. Okay, made in any assessment year for which the liability has been incurred. And now if you are making the payment, otherwise then by all these banking channel, that means I will logically say that it is a cash transaction. Okay, aggregate payment to a person in a day exceed 10,000 rupees, then in that particular year there will be a disallowance. But technically the law does not say that there will be a deemed, there will be a disallowance, but the law says it will be chargeable to the income tax. That means it will be a deemed income of that particular assessee. See, this is chargeable to the income tax. Okay, why it is using the word chargeable to the income tax? Because in my example, see, in the year number 2, there is no expenditure. In that particular year, there is no expenditure. Okay, so in the year number 2, when you are making the payment, it will be a deemed income of the assessor. That means income will be chargeable to tax. See, you disallow, that means indirectly you are taxing the money. Now in the another situation, you are saying that whatever transaction you have done of paying off that particular liability will be a deemed income. So income is brought to tax. Ultimately, it has been brought to tax. As simple as that. Okay. So that is a situation A. Okay. Now, in the second situation, what will happen? Okay. In the second situation, you are paying in the year number 1. There is no expenditure. In the year number 1. Okay. Now, in the year number 2, there is expenditure. So, you are already booking the expenditure, but for which payment you have already made in the earlier years. So, will there be a disallowance in the year number 2? Answer is yes, there will be a disallowance. So, I will disallow because I am already incurring the expenditure. Okay, for which the payments have already been made. Okay, now these payments which are made does not necessarily mean that you should have paid in the same year, because the payments have been made. Otherwise, then by account pay check, aggregate and all that condition remain as it is. Is that very much clear? So the expenditure when you are incurring, okay, So year of expenditure is your current year in the second situation number B, and in that particular expenditure you have already paid cash. So that particular expenditure will not be allowed to you as a deduction. Okay, so these are the hardcore basic principle of this cash transaction. Okay, and there is one more clarification of the law under this particular provision, but I will again actually it is not relevant also, but I will bring to your notice. Let me erase this. Okay, now if there is, in the given question, as I told you, it is not relevant, but I will bring to your notice. If there is any payments which are made for playing, hiring, leasing of goods carriage vehicle, okay, instead of 10,000, you have to take it as a 35,000 rupees limit. So basically, if it is payment made for, it is a payment which is made for playing, hiring, leasing of goods carriage vehicle. That's basically payment made to the transporter. Then instead of 10,000, you have to consider the limit of 35,000 rupees, which is provided by the law. So same provision, but you have to consider the higher limit in this particular situation. Okay. Now this is a subclause 4, which is again not very much relevant in the given question, but I'm doing very conceptual things, so I want to bring this particular thing to your notice. Okay. Now see, income tax provision says that you should not pay cash, and if you pay cash, then there will be a sort of a disallowance. There is a dislike by the lawmaker. Okay. So there may be a possibility that supposing Mr. A has to pay the money to Mr. B, say for example, okay, now Mr. B is saying that you pay me cash only, okay. Mr. A says, no, I will not pay you cash, but I will pay you by banking channel, so I'll give you check. Okay. Now if between Mr. A and Mr. B, supposing a dispute came, then Mr. B will go to the court. That see, he is not paying me cash because I have to receive cash. Okay, so he will file a suit in the court of law that as per our contractual term, I have to receive cash, but he is not paying me cash. He is giving me check. Okay, supposing he go to the court of law, then the law says that this kind of a suit will not be tolerated. You cannot tolerate that you are asking compulsory cash, and otherwise you are trying to execute your contract in some different way. Law says that now this is not permitted. So if there is any such dispute, okay, if there is any such dispute under any other law, okay, any other law for the timing in force for this cash and check transaction and all that, okay, then no person will be allowed to raise any such suit or case or proceedings in the court. So any such proceedings will not be tolerated by the law, that you pay only cash. No, that cannot be accepted. Okay. So now in the given case, see, 23,200 is fully paid in cash.